You can have a budget in place, but if you don't have an effective monthly routine, it makes it difficult to keep on top of your money management. In this video, I'll be talking about how to have an effective money monthly routine. Hi, my name is Samantha. I'm a director at Deep Pockets Finance Chartered Accountants. We believe that anyone can have deep pockets as long as they effectively manage their finances. In this video, I'll be covering 3 things that you need to do on a monthly basis. Review your budget and your actual spend. Number 2, move your money to where it needs to be. Number 3, pay yourself. Once you have a budget in place, it's important to ensure that you have a monthly routine so that you can keep on top of what's going on and what's going to happen in the coming month. Number 1, review your budget and your actual spend. You can do that by looking at the budget that you've put in place and also looking at your bank account transactions or the receipts of the expenses that you've incurred that month. The reason why it is very important to carry out on a monthly basis is that it keeps your budget relevant. It allows you to spot any errors. So for example, if you're paying via a direct debit and they take more than you're expecting them to take, or you pay more than you should have, it's quicker and easier for you to spot it if you're looking at your actual spend on a monthly basis. It allows you to cancel any subscriptions that have overrun. So sometimes I do this, that I go to certain websites and they give you an introductory offer whereby you have a subscription for maybe a month or maybe 3 months for free. And the whole idea behind that is that you forget and then they continue to take their money. But when you're reviewing your budget and when you're reviewing your actual spend on a monthly basis, it's easy for you to quickly spot any subscriptions that have overrun or that you don't need, and you can quickly cancel them and possibly get a refund. So the way that you review your budget is by opening your budget and then inputting amounts against what you've planned, so what you've actually spent. So if you've got your utilities, if you have money that you've planned to spend, you basically go ahead and put what you've actually spent, and this allows you also to see if you're over or under spending. In some areas, if you notice that you've overspent, you can then dig a little deeper into understanding why this is the case and if this can be changed in coming months, or if you need to adjust your budget for the future. So step number 1 is to review your current budget and then to review your expenses for the coming month. When you're reviewing your budget, also allows you to plan for the coming month. So then you have an understanding of how much you're going to spend, how much you're going to allocate into certain areas of your expenses. So you review what's happened in the past, but you also plan for the coming month. Step number 2, move your money to where it needs to be. So this basically means that when you receive your salary, the first thing that you need to do, if you've got a budget in place, then you should have an understanding of how much you're going to spend in the month, and you should also have an understanding of how much you're able to save. So it's important to move your savings as soon as you can, because what tends to happen is if you keep that money in your current account, you become tempted to actually spend it. And I would also go to the point of saying maybe even automate this process. So by automating it, you can set a standing order. So this basically means money is taken out of your account at a set date, and then that money is then moved to your savings account. Another way of managing your expenses is having a dedicated account for your expenses. Now what you can do is, if you have just a current account for your expenses, you can move the amount that you're expecting to pay that month into that account, be it direct debits or standing orders. All of that can be taken from one account. The good thing about using this method is that it stops you from overspending. And when you don't overspend, when you pay the obligations when they're due, this will help with your credit score, because if you miss on those payments over and over and over again, it will begin to affect your credit score, and then that can affect your future credit when then you decide to invest in something like a property or a mortgage. So it's important to just move that money aside so you're not tempted to spend it in a situation where you're thinking, yeah, I'll spend this today, but later on I may have the money coming back. Just put the money to the side and then allow it to be taken via direct debit or standing order. If you can even pay the expenses at that time, then that would be better. Another tip that you can use would be to ask your providers to take all the money out at a certain time in the month. So it could be if you get paid on the 1st of every month or on the last day of every month, you can ask your providers to take the direct debits at the first week of the month, so between the 1st and the 7th. That way you know that all of that's done, and the coming months you've already paid for all of your obligations. This brings us to point number 3. Make sure you pay yourself. Now, this is a point that is often neglected when we're talking about personal finance management, when we're talking about budgeting. And this is something that I personally learned through experience. When you're going to work and when you're working for a living or when you're running your business in order to gain an income to look after yourself, most times we prioritize paying the bills, we prioritize saving for the future, we prioritize everything, but we do not prioritize paying ourselves. Now, if you don't pay yourself, what tends to happen is you lose motivation. If you're trying to save for something in the future, you lose motivation towards that saving. You lose motivation towards going to work or going to run your business. It's important to understand the things that motivate you. And it's important to also set aside a little bit of money. It doesn't have to be a lot, just money that you set aside so that you can do whatever you want with that money. It doesn't have to be anything within that budget, but it can be something like, don't know, going shopping, maybe going for lunch. If you like to collect stamps, if you like to collect other items, you can just specifically put that money aside for doing whatever it is that you want. If you decide not to use it that month, you can even save it and then eventually buy something bigger or more expensive. But the key principle here is ensuring that you set money aside for yourself to do whatever you want. Ergo, pay yourself. So in this video, we've covered 3 points that you need to include in your monthly money routine. So the first is review your budget and your actual spend. Number 2, move your money to where it needs to be. And number 3, make sure you pay yourself. Thank you so much for watching. See you next time. Take care.